All right, well, let me say hello and welcome to today's training session. Doug here with the LincolnList.com, and today I'm going to be talking about the single greatest trading indicator. That's right. The single greatest trading indicator to use for stock market wealth generation. So for some of you traders or investors out there that are wanting to know, how do I start capturing these large moves in stocks? I see them happen all the time. I see them happen every day, and I'm just not in them. Or I'm in them, but I can't stay in them long enough. How do I get these 20%, 50%, or upwards of 100% moves? Is it the type of stock I trade? Is there a specific indicator I should be looking for? Is there a specific setup? We're going to talk about all that today. Now, the reason I feel this is important in a trader's development is if you followed me for any amount of time, or maybe some of you trade with me in the trade room, I have a thing that I say all the time, and it was also in my free DVD, which I'll post a link on the screen for. And that's the three trader components, which is idea, execution, and management. You need all three of those to have a very successful trade. I don't feel that it's very difficult for a trader that has an aspiring trader, let me say, someone that knows very little about the stock market. It doesn't take long in your development to learn about technical analysis, to understand what a flag breakout is, a flag breakdown, consolidation, support, resistance. It's pretty easy to grasp that concept. And it's pretty easy to grasp an idea and say, I want to buy a stock here. I want to sell a stock here. But I think all of us have suffered one time or the other, or perhaps still suffer, to where we were in the right stock. We were in it at the right time. But then we sold it for a small gain, and then we continue to watch it for months upon months, continue to grind up several tens, 20s, $50 per share higher, and we just count this imaginary money that we left on the table. Again, I've done that. I've had my fair share of those, and I think all traders experience that. Now, from time to time, we will experience that, but we want to be able to capture those moves. So how do we do it, and what is this magical indicator that you speak of? Well, guys, it's price. Now, some of you may have heard the saying, price pays. Price is everything. And that's true. It's all about price. And if you don't quite understand what I'm talking about, stick around. You will. Because this should, in fact, make a lot of sense to you. When we talk about price, let's first understand that you and I, as retail traders, which I'm assuming most of you are, you're not super billionaires that are running hedge funds, or you working at Goldman Sachs watching in my video right now, but we're mostly retail traders trading on our own, trading our own money. We don't dictate what price is. You see, we have to make value judgments ourselves as traders. But when we get up, we can't say, you know, that stock is overvalued. That stock is undervalued. Now, we can use technical analysis to kind of determine that. We can use certain stock market rhythms and patterns to determine that. But truth be told, we don't dictate what the price is. Because if a stock goes up to a certain price and we think it's too high, if somebody is willing to buy it at that price, then it's going to go higher. And if somebody is willing to pay more than the last person paid for it, it's going to continue to go higher. Whether it's overbought or it's oversold is irrelevant. We don't have enough finances to make a change in that stock's behavior, and price is not something that we can control. The market sets that price. The market makes that price, and the emotions and the people that trade those stocks create whether that price is a valid price or it's not. Because if price was important, 99% of these stocks would be trading a lot lower, because some of these stocks continue to trade higher year after year and make no money whatsoever. So price is important. And when we say price is important, that means what is the market willing to pay for that? So that's one aspect of price. The other aspect of price is every single stock or security or financial instrument will spend a period of time going through what we call price discovery. So each and every day, each and every month, each and every week, a stock will have to sniff out what it believes is its price. Now, certain stocks will trade within what we call, this is what dictates a stock's range. So sometimes a stock won't be doing very much. It'll be trading within a tight range or a tight consolidation. So when we speak of things of consolidation, we're talking about periods of time where the stock itself is taking a breather. It does not know if it wants to go higher. It does not know if it wants to go lower. It's undecided. It's holding a price level, but it's undecided about whether it's going to make an up move or a down move. So it's in a period of what we call price discovery. So what this means is the market has dictated this is the current price, but nobody's really willing to pay much more for it, and no one's really willing to sell it or short it or, watch it go much lower. It's just sort of stuck. And another thing is a lot of times people will take a look at a stock that's going through a corrective period, or maybe the market goes through a corrective period like it had in August, or maybe like it's doing right now. And people always try to sniff out a bottom or sniff out a top in stocks. Remember, it's not up to us to sniff out tops and bottoms. It's up to us to put the clues together and try to come up with an understanding. Because when the market starts to drop or a security starts to drop, that's what it will do. It will find a level, which we talked about before with support and resistance. Then it will hunker around that level, so to speak, which is a period of price discovery, trying to think about what its next move may be. Will it attract traders and investors into this price? Or will it not attract traders and investors? If it doesn't, it will have to go lower until it finds a buyer. And this is something that we've talked about too before. That's what the market has always done. It will drive prices as high as it needs to up. It will continue to go up and up and up as high as it needs to get rid of investors, turn them off, so to speak, unattract investors, make them want to sell, and it'll drop as far as it needs to go to make it attractive again. That's what it's been doing since its inception. It'll go up and up until it's too high and nobody wants to own it, and they sell everything. Then it drops, and then it gets cheap, okay? So I'm going to try to explain this in a few different scenarios for you, for those that are confused, if you're not. So let's talk about Roku, a very good example of, I'll give you a scenario of how something could play out like this and why price is important. Remember, as I'm going through this, it's not what you and I think is the right price. It's what the market dictates that price is. And all we can do as traders is react to price. So I'm going to look at Roku, and I'm going to go from the vantage point here that this is obviously a stock that's gone bonkers this year. Beginning of the year, you're talking about $30 or whatever, $40, runs all the way up to $175 before going through a correction. I want to talk about this period of time where it really starts to stretch its legs after its earning between the period of August all the way up to September, about a 1 month time frame. This stock you'll see a lot of stocks that do this. Shop did this, TTD did this, a lot of names do this. So go through a Momo phase, okay? And price also dictates what we're going to talk about is accumulation and distribution, okay? Because not every stock is going to go through that accumulative period. And, not everyone's going to go through the distribution period at the same time. They're going to rotate. Money rotates throughout the market. It's always done that as well. So back on topic, this stock's obviously throughout that period of time attracting a lot of attention. And it's also attracting a lot of regret because there's a lot of people who bought it at 35 or 40 or traded it back in the early part of the year, and they're not in it anymore. And they always do the imaginary, wonder if I held, okay? But then it starts stretching its legs, and there's this whole group of people that have missed this rally, and the FOMO takes over, and it just goes up and up and up and every day. Some of those choose to ignore that FOMO, and they just buy it at any price and get smoked. But let's just look at the point that you're somebody that wants to own something like this, or from the viewpoint that it's gone up, it's gone up, it's gone up. You're waiting for the very first pullback to get in or sell-off period to get into that stock and then buy it. Because you've been waiting for a red day or a couple of red days or a few sell days to get in. A typical trading strategy or common trading strategy. You finally get that here on the 9th. If you look, let's open up this daily chart down bottom here a little bit. This is the daily chart. So you finally get that selling point. Now what you see is it's a pretty aggressive selling on this. It goes from 175 to 140. A pretty abrupt drop and a sharp drop. Again, a typical move, for those who've been trading for a while, a very typical move in a stock like this is up 300%. Again, saying the words 300%, yes, it was overbought. It was way overbought even before it got to that level. It was overbought in the early parts of the summer when it was trading at 100. It was too high then, or, psychologically people thought it was too high. But again, price is the most important thing. Yes, it was overbought. Yes, it was theoretically too high based on earnings and based on stock movements or what's normal and what's not normal. But people were still willing to pay more for it. So again, we don't set that price. Regardless of what we think about it, the stock's going to do what it's going to do. If somebody's willing to chase it at 150, it's going to go to 150. If they want to pay 160, they'll pay 160. And that's how bubbles get formed, is by people, euphoria, just wanting to step over each other, stampede over each other to buy. So anyway, back to the pullback. Not uncommon to see that happen. Now, there's going to be a lot of people that jump right in on that move. They're just going to flock in on the first red, hoping this thing the next day goes back to its normal behavior. But that's not normally what happens. You take a look at what happens here. We'll open up this chart a little bit when we're really focusing on price. Is this period of time between the 11th of September all the way up to the 17th. You've got about 4 or 5 days here of what is actually consolidation. Now, when we talk about price, guys, this is price discovery. So the thing has initially had a flush. It's spooked out the people that chased. They've gotten out. People that's bought in it early have stopped out. The panic or the emotion or whatever got into that stock has kind of died down a little bit. Now what the stock needs to do is tell us. Again, we're not trying to tell the stock what to do. We have a tendency to do that, like, go the hell up, damn it, or stop going up. I've said that before many times when I'm in a trade, but let it tell us what to do, okay? So what it's actually doing is it's trying to figure that out for itself. This is a period of price discovery, and it chooses the numbers of about 150 a share, somewhere 145, 150 a share. That's its range. It sticks inside of that range, and that's where it decides, I'm going to try to figure out whether this is a price. Now, the reason it does that is it's trying to attract people into it. Are people going to come in and buy it? Are they going to find that that's a value, investors, hedge funds, all that kind of stuff? Are they going to find value there? Are they going to say, this is an opportunity for us to buy? Or is the overall market going to reject that price? Now, how you know whether they do this or not is what we've talked about before, and I've said just a little earlier, is range. That range break. So if you're looking at an investor, I'm just going to go from investor. I'm going to take intraday traders out of this equation for just a second. If you're trying to invest in this and buy it, meaning holding it for a couple of days, you really don't have that clue, or that clue for that next up move will not come, or the next move actually will come from whether it breaks that range. If it breaks the range to the upside, and the range would be the tops of these last 4 or 5 days, which is like 150, 360. That will give you the clue that if it's able to come back up out of that, you'll often hear traders refer to that as coming up out of the hole, breaking range, breaking consolidation. This is sort of the theory behind flag patterns. If it breaks above that, then you will probably see a big move that starts moving back up to the previous sell point, which is $20 to $30 away. That's how you catch a big move. It does not do that, though. It actually breaks that. Now, the thing that you have to understand about consolidation, unless you're a scalper trader or an intraday trader, I'm going to appeal to investors first, and then we'll talk about traders. If you're one of the investors, if you're trading inside of the consolidation like this, you're basically guessing, because the stock hasn't decided whether it wants to go up or wants to go down. It's actually going sideways. It's just going sideways. So if you're waiting for a monstrous move, there most likely is not going to be a monstrous move until it leaves that consolidation either up or down. Make sense? It's not going to make move. Now, for the intraday traders, it's still not going to make a monstrous move unless it breaks range to the upside or downside or gets out of that consolidation. But intraday traders, which is what I am, we know as well are these little small increment moves in intraday where you can grab $1, $2 or something like that. They can make some nice moves, maybe not humongously large 100% moves or 50% moves, but they can still make some great cash flow moves, and we'll talk about that in a second. Now, it doesn't do that. What it does is it drops lower and it breaks that consolidation. Hence the size of that candle. Now, a lot of traders are like, why is it selling off so much? Well, one of the reasons is because it tried to find a stopping point. It spent 5 days trying to do that price discovery, and eventually lost that price. So basically what that tells you as a chart technician person that's looking at trading or investing is that, the market just isn't interested in this at 140. Now, maybe next year they'll be stampeding all over each other again for 140. I don't know. But for right now, and for the short term, 140 is a no-go. The market dictated that price, not me. I thought it was overbought when it was 70. So they're just saying, okay, 140 is not good. So it drops down to a level here, tries to bounce on its 50 moving average, which is the red line, customary bounce point for a stock. It can't even discover any price there, and it washes out even lower. So it finally stops at this 100 level, okay, 102s, 103s. So you've been there now for a couple of weeks, okay? So when we look at this, what the market is telling us right now at this point is Roku is yet to be poised for a massive move. Now, yesterday it went up a couple of bucks, $3. Like I said, if you're an intraday trader, that's a completely different thing. We'll talk about that in a second. But if you're looking at somebody who says, I want to invest back in, I want to buy this long, you're not going to see that move long until you get above a range. And right now, that would be just right above the top of those candles right there. That would be the price. That's roughly 110.16, say 110. I'll put it right there on the chart. That's where you would see that range break. Now, why is that price important? Because that right now, for a couple of week period of time, actually going back to the 23rd, that is resistance. That has acted as a resistance. Again, I don't make the rules. I'm not the one that chose the 110 level. That's what the market's telling me. So what the market's telling you right now with this stock, if you're wanting to know, any stock that you're looking for, is that it's doing the same thing as it was doing back here in the middle of September. It's trying to discover its price. It has yet to really tell us right now, do you want to hold this 100, 105 area or not? Now, it's trading back and forth. Again, if you're an intraday trader, there's lots of moves. Now, speaking of intraday traders, you take that same philosophy and you move it down to a short time frame. Now, I'm looking at a daily, so if you're a swing trader, momentum trader, investor, you're looking at these daily charts for that information. For an intraday trader, you're looking for it at the same, at a much more macro level, if that's the right word. You're looking at it on a shorter time frame. Now, obviously, shorter time frames can give more false signals, but I think most of you that experience day trading or have tried day trading, you're using the same philosophy about price discovery. You're just using it on a smaller level. Now, why is this important? Let's get to the point. Why is this so important? Because if you're day trading this and you're thinking, well, this sets you up for your risk versus your reward, your position sizing, and everything that follows after that. So if I'm trading Roku right now and I'm buying Roku today, I look at some support like this intraday and I decide I want to buy it. I buy it here with a tight stop under. That's a trade. A trade. That means I'm just trying to get a little boost out of this. Now, I'm not expecting this thing to go up $25 from here when I do that. That's not what I'm expecting. I'm expecting maybe 50 cents, maybe $1, maybe a bump, because I'm playing that short-term price, because early in the morning, it discovered price at 105.30, held that price, and it broke above that price, and it established like this is that price. This is the price discovery for today. Now, it's a shaky level because it's a shorter-term level, because the longer these levels go, the more important they are, but it's a level that a trader can use. And that's what we want to look for if we're intraday trading. So the difference between the intraday trading and the investing is you're looking at these different time frames. But when you do that, it lets you know it's just a trade. I'm not expecting it to go. Now, maybe it will, but there will come a day that both of these time frames will line up. So if you're the day trader out there, at some point, they're both going to line up. You're going to see that intraday price discovery, and then you're going to see that take it out on a multi-day level price discovery. So maybe one day you see a breakout like this on an intraday that's roughly around that 110 level. Now, when that happens, a trader would know that follows the technical analysis, or this is part of their process. They would understand that this is the time to get ultra heavy with this risk versus reward because of that time frame, because of that established price discovery. So price is important. So when we're talking about this, to shed it down to its purest form, 110 is big price. So in the future, 110 is massive, massive. You can see it wasn't able to get through it yesterday, struggled with it today. 110 is the key. And you'll know that because if you set an alert at 110 right now, just watch it. Maybe it does it tomorrow, the next day, the following day, at some point. If it breaks that, you will see this instant surge of volume, because that's what this price is all about, understanding those levels, that they're not all created equal. Now, there's still the outside chance it goes the other way. So let's say you're looking at it from the short angle. If it loses the base of that price discovery, right, which now we're looking at $98.70, $99, right? Put it right in here. Okay. Then you may see a big old red bar. So for you traders out there that may be in it, you say it goes underneath that, you see, why is it selling off so much? because a big level, a big piece of price discovery was rejected. Now it has to go find another place to land. Now you can use support, resistance, moving averages, and other tools like that to figure out where the landing zone will be. But remember, when it does that, it's going to need time. So a stock that's been up this much for that long, it's going to take longer, right? It all works the same as it goes up as it goes down. A stock that goes up longer, that's up more of a percentage, that's had a longer rally, it's going to take a lot longer to correct. Same way with the market. When it decides to correct, it's going to take a lot longer to find a bottom. Stocks that don't go up for very long won't take very long to find bottoms either. It's just remember that cycle is going to continue to repeat itself because everything goes through the accumulation and distribution. So, how this works is if we see that move, it closes above that, it presses above that, you most likely, nothing's guaranteed in the stock market, but you have a very high probability of seeing this thing make a massive, massive multi-day move because it finally cleared range. And at some point, it will do that. You know, that's one thing you do know for sure that's a guarantee. It won't trade the rest of its life here. Now, for some of you that are new to the stock market, this is what they call range bound. So for right now, it's stuck inside of that range. It's between the 100s and the 110s. It's in that range. So anything that you're trading in there, you're trading within the range. You're trading off of the consolidation. You're scalping. You're trying to take advantage of quick up moves, quick down moves. That's the kind of approach you have. Until it breaks that range, you can change your approach. Now, to give you another stock here that kind of did the same thing to show you what you might see out of something like this, understanding price, is an Ulta, ULTA. After earnings being sold off, needs to go through a period of time to shake everyone out, calm its emotions down, discover price, collect itself together, and, you know, figure out where it wants to go next. Just like we do in life, right? Sometimes we get shaken up in life. We get beat up in life. And we need to kind of dust ourselves off, take a deep breath, step back, consolidate. Then we go out and make our next move. And it did the same thing. So when you see what happened once it broke its range, which was this 240.59, look at the move. Look what happened. This thing haggled back and forth, didn't do much of anything, and then all of a sudden breaks right above that 240, let's just say 241. And look what it goes straight from 241 to 265 nonstop, right? Like $35 nonstop, just straight up. So when traders look and say, why do you see moves like that? Because that's what it does. When it breaks that range, that's where you see the violent moves. So the first thing you're looking for is price discovery. Where is the market dictating price? Price also lets you understand what's the interest. What is the interest in the stock? So right now, the Roku thing, there's not interest yet. You'll see interest compile on top of it if it either breaks 110 or it goes below 98. You'll see interest change, but right now it's like, it doesn't know either. So it's just a trade. Now, obviously, Ulta has sold off since then. So you would be wanting to wait, well, is it going to remount itself back down there again? Or is it eventually going to take itself out? And that's how you look at each and every trade, even the market. So in a nutshell with this whole thing, that indicator is price. Price is everything. It's the only thing that pays. It's not whether you and I think it's the right price, whether we think it's cheap, or whether we think it's expensive. It's whether the market thinks it's cheap, or the market thinks it's expensive. And unfortunately for the market, it doesn't always operate rationally. You know, sometimes it over-evaluates. Sometimes it under-evaluates. But when you're thinking about capturing big moves and you want to look at charts and you say, when are they most likely? Again, there's no guarantees. Some of these will just be total fake outs. That's just what the market does. Again, it's not rational. But when you want to look at big moves, where will these big moves take place? They take place at certain prices. This price means something. We talked before, support, resistance. These numbers mean something. So before you trade a stock ever again, starting tomorrow, the next day after you watch this, take a look at that price. When you're ready to buy that stock or you sell that stock, look at that price. Look at it and ask yourself, what does this price mean? What does it mean? Am I selling this Like if you bought Roku and it jumped to 110 and crossed over it and you sold it, you just sold it. You're like, it just broke this level. Maybe it goes to 120. Am I selling it at the right price? Where am I in relation to the range, in relation to the chart, in relation to the market's dictation of this price? Where am I? Where am I with that? And that, guys, will help you stop getting shaken out of trades. Because all that stuff that happens in between, all that candle back and forth, that's noise. Look at the price. When you buy it, look at the price. Is it too much? Am I chasing it at a high day? Am I in too early? Have I not waited for it to develop a price discovery? Am I chasing it? What am I doing? Ask yourself that question. Same way when you sell it. Am I selling it towards resistance, or is resistance way off and I'm just selling it to sell it because I want the green? What am I doing? So see if that helps. So I want to thank you for watching this lesson, and I hope it made some sense to you. Sometimes this stuff can get kind of confusing, especially when you start rambling on and you're going on, at least me, and I start sweating or whatever. But if you guys need help with your trading, take a moment. I'm going to post the link up there on the screen. Visit me at thelincolnlist.com. You can trade with me live. If you just want to shoot me out a question, or you want me to talk about something, or maybe I left something out in the video, feel free to put it down in the comments section, or feel free to give me your input one way or the other. Until the next trading lesson, I want to thank you. Trade well.